I'd do a little trend review of the market action on Friday. You can, this is really important to do trend reviews because whatever's in the past just repeats over and over again. You know, the principle of supply and demand does exist in the market. You just need the skill to be able to read it. Um, anyway, who cares about that? Let's go to the action here. So this was, I actually got out somewhere around here. I don't remember where exactly, but over here, like in the morning, let's take a look at the action in the morning. You have sideways movement and then you have a breakout, right? And breakout is on volume. So this is a key behavior to note. There's many behaviors in the market. You don't need to know all of them. You just need to know of hand few, and that's one of them is the breakout. Alright, so you have a breakout and it's on volume, as you see over here, right? See the volume there? But also, there's other things you want to see. As it takes out this support line, like right here, what do you see here? It's 87 and 86. Is this low? No, it's 870 contracts, 860 contracts. So it breaks down on volume. Even if you have a time-based chart, like, I don't know, 15-minute, you would see that there would be a price volume breakdown. So you could use any type of chart, but the key is understanding the behaviors. And over here, I'm just using this chart because this was part of the Wyckoff method, and this is what he does in part 2 of his course. Anyway, so you have this high volume breakdown, and it's legit because it has follow through. Alright, so now it's all about getting in the pullback, and I got in the pullback here. Now this was a little scary because it comes back to the breakout level and bounces on top of it, but notice that the volume is lower than the breakout volume. I would have liked it to be even more lower, but you're not always going to get that. So it gave a deep pullback, and there's no big prints in here. Oh, and one of the most important things is, like this, I was kind of anticipating this would happen because of this. See that 1,100 contracts traded? 114, I think. That's basically 1,140 contracts. So about 1,100 contracts traded over here. So this was that initial, impulse, that distribution, that really they started selling strong. I mean, there's some evidence that occurred back here, but I don't want to look in the, I want to see like in the consolidation when it's hinging and you have that high volume in there, and then they broke it. Anyway, so now it pulls back, enter, price starts moving sideways. Again, it hinges, it comes into like a squeeze or like small ranges. So it comes into small ranges, and then again, good volume on this breakdown, this breakout right here, and you have over 16, I think, I don't know what the hell, this is 1,600 contracts up here, pressure, bang. Over here you have an 80 print, so it is volume, like volume at support, volume breaking through support. So you have 800 contracts, and this over 1100, I can't really see, but it's a lot of contracts here, and you have definitely over 1,000 contracts, and you have good volume and a breakdown. And this, what I like about this is, not only is it a nice break over here, but you see on the top where it says 1 and 2, that means there's low volume there. So what does that mean? That means there's no trading there, and that's weakness. So demand is weak, demand is coming to a conclusion, and supply asserts itself, breaks down. Price starts moving sideways, and again you have that low volume, and breaks again on a high volume print, 94, 172, 2,000 contracts here. It just breaks right down. When it breaks down, demand comes in, and this is like a counter trend rally, like right here, because it must have hit a level or something. So you have heavy demand coming in, and it starts moving right to the area of the breakdown. Now understand that this entire area's distribution, they sold here, break, sold, break, sold, pressure, pressure, sold, sold, heavy volume, break. And look at this volume here. So now you have all of this shit in the background, like it's going up here, but don't be confused by this. Okay, it's just a counter trend rally that is occurring, and there is tremendous amount of like buy, whether it's short covering or whatever. I'm not sure, but it does start, and then all of a sudden it gets into the range of this breakdown area, and look, see that supply is asserting itself again. So this action is it's very important, because this is where the turning point where supply takes control again. You have 1100 contracts break, then you have a strong attempt by demand to go up, and with all this force, all this pressure, they're fighting over here, the bulls and the bears. What happens? They break right under demand. See that? So supply, it's like a tug of war here. These two bars, it really is like a tug of war. You know, this right here, supply forces it down. It tries to break this area and go down to support right here. This is what demand comes in strong, and it says, I don't think so. So imagine supply pushing, then demand pushing, and then supply asserting itself again and breaking the low of the demand right here. So now you have price moving to the side, and then over here, this was interesting. Like, I couldn't really, at this time, you can't really figure out what the hell is going on, because demand is coming in again. But understand that this is the effort to come right back. Okay? And what happens? That effort is negated. Bingo. I mean, all this volume, all this effort, and they couldn't do it. So what explains this effort? Like, why is this high volume and all that? So what is it? What's going on here is after they break down, right? It comes into that area, and these sellers here are selling the retest. So you have selling, you have a pullback, and these sellers are selling into the bounce. That's why it's no coincidence that it's in this area right here of heavy volume. It's in that area that they're establishing more shorts. So this is effort, meaning there's bag holding. It's even a term. It's a derivative of distribution that that you're pulling back, and the rally's trying to come back up, but they're selling into it. And then what happens? Break. So now, and also, like, when it breaks again, the 77 here, it means that it's breaking on volume. I don't want to see light numbers. You see, like, 77 is the biggest print in this column, and that's coming at a former, like, low. That's what I want to see. I want to see it break on good volume. What does that mean? It means that they absorbed the demand and busted right through it, clearing the way to go lower. That's what it means. So boom, like over here, pressure, 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 and break right through. Now it pulls back, start moving sideways. These two are very important because they show demand is weak. Alright, demand is reaching I guess this, you call this a LPSY, or you could call this the feather's weight, like Wyckoff called it, where there's going to be a turn or whatever. It doesn't really matter what you call it, or just it's weakness. They're not, they stop buying. So now price moves sideways, and then again 81. I think that's the highest print here in this area. And where is it coming at? Right at that support level, busting through it. See that? So at support and resistance, volume is, you have to understand where volume and where it is meaningful. I'm showing you one area that is meaningful is at support or resistance. That's where volume is meaningful, because it's at these levels that one side has to break through and defeat the other side. Meaning over here you have supply defeating the support level, the demand at support. That's where volume is meaningful. This is also meaningful because this volume is on the pullback. And what does it represent? It represents selling into the rallies. It represents selling the pullback. It represents, getting a good price. So this is also one of the I don't know what to say, like one area or one behavior where volume. There are a couple of key concepts for volume. Anyway, so it starts moving to the side again. Volume comes up, no follow through, heavy volume, but can't go up, and it dissipates right here, where there's the one big problem. What happened to it? It went side. They 95. I think they're selling the resistance area. That's why this print is high, 95, and it cannot make further progress. Just like this, 1,200 contracts. Where's the progress? Do you think this is buying? If this was buying, it would have follow through. But they're selling at the best price and bringing it back down. Again, 95. But where's the follow through? If it's buying, shouldn't it be going higher? No. What's going on is their price is coming up into this area of resistance and they're selling into it. They're selling the pullback. Then price starts going to sideways. This is very bad for the bulls. The one right there comes back 3, and then again it goes to the support area, and what do you get? Bing, 630 contracts. That's not that high of a number, but it's a good number. It's not like 20 or 30, like 200 or 300 contracts. It's a nice, good. I mean, it's good, and sometimes you don't get a very clear indication here, but you get it here. See that? So it breaks right through, and now these are the counter trends, and you're gonna get high volume on the counter trends or the pullbacks or whatever, but that's only to push prices back into that area. So, that's what happens. It comes over here, and then this is telling me something. Again, you have high volume in a critical area. What's going on? Is there follow through? No, there isn't. What's going on? They're selling the pullback. They started selling right here. 1100. It's not bullish. Why? It's not following through on a big column. You see, it's near the high. If this was pressure, if this was accumulation, if this was buying, there would be follow through. But it's not doing that. It's going to that critical area, having high volume prints, which means there's heavy selling into those rallies, selling into this rally, selling into this rally. This is some buying here. It starts going here, then there's buying, because you have buying, and then there is follow through. Over here you have 3 X's. There are 3 boxes. So there's follow through. But what happened here? Where's the buying? 1,100 contracts, nothing. 1,200 contracts, where's the follow through? Where's the follow through line of X's? They're selling those rallies. There's weakness in the background, and then finally it starts moving to the side, and you have 1,200 contracts traded, and then you have again 1,200 contracts traded, cannot go up, no follow through. And what happens? Supply presses again down and presses again down. So now it just bounces, starts going to the side. I think there's a 0 up here, so that's very bad. 0 or something, some number up there. It's a single print, and now you have this low. And what happens? 2,300 contracts at the low, pressing, breaking through, and have follow through on the next column. Breaks, follow through. Breaks, follow through. Breaks on high volume, follow through. Bingo. Now you're going to they've cleared the path, comes back up in this level. Finally, it's only 60 contracts traded, and down she goes. And now again, what happens? They go to that area, that 87 area, and 88 come in, and they break through. And 2,300 contracts followed by another 1,500 contracts. This is pressure. Sell, 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 sell. Alright, now it comes up on 25, but what I explained to you like 3 times already is that do you have follow through? No. What is it saying? It means that as the bounce is occurring, they're selling into it. The trend is down, high volume on a pullback does not represent buying. It is a bounce that is being sold into by smart traders who are selling the retest. Then it starts going to the side and finally breaks down at 2700. And again, telling you this behavior is very apparent because you're breaking down support. That's one of the areas to look for. High volume. You see, that's the problem, is everybody's just taking a look at the histogram, over here, right? Or they look at the volume here, they get confused. Because everything has volume, all these prints. How do you make sense of it? The key is understanding behavior, which is price and volume together. The price component is the level. Then you start looking at the volume. Okay, that's in the case of breakouts. In the case of pullbacks, the price component is the pullback to an area of a form of breakout or a breakdown, and then you look at the volume. The first behavior, which is here, the breakdown, this is telling you that they're breaking or absorbing the support area, all the demand, and clearing the way. So this behavior is telling you that the volume that is coming at a support level is absorbing all the buyers that are there and breaking right through. Whereas this behavior is telling you that as the pullback occurs, they are selling into it. Both of these behaviors have certain indications. Okay, like in the pullback, do you have follow through? No. What is that telling you? That is telling you in part that they're selling the rallies. The trend is down. There's a breakdown in the background. Then there is a bounce. Then there is high volume. Then there's inability to follow through. What does that mean? They're selling the retest of a breakdown. Breakdown being here, pullback being here, sell it. When you're at support or resistance and then there's pressure coming here, it's breaking out. Is there follow through? Yes, there is. What is that telling you? That means they're clearing the path to go to progress, in this case to lower levels, because they've absorbed all the demand that was at support and broken through. So these are two behaviors of volume, and they can be observed on any chart that has price and volume. I've seen it on bar charts, Renko charts. I've done it on Renko charts, on point figure charts. These behaviors are independent of the chart. The chart is just showing you price and volume. So, like, the chart is just a canvas. The behavior is independent of any type of chart, and or as long as you see it on the depth of market absorption or breakout volume. You'll see it on Anyway, so price moves sideways, lack of demand. How do you know? It's hinging, it's unable to rally. Look at the small ranges here, only 2 boxes in these columns, and then breaks right through. 67, not a lot of volume, but good enough to break through. Together is 124. Then it starts moving sideways. Again, pressure coming in, goes down, pull back, sell it, comes right back down, and you're moving sideways. Here you have some demand come in, and then it starts getting all choppy, so I can't read that. It's just pulling back. That's all it is, and just something going on, but it's not really important. Why? Because, they go to a resistance area, like right here is a resistance area. When it tries to break out or break through, you have 29, 24. and then you have 52. You think that's a breakout? There's a difference between 52 and 276. Look, on this breakout, 2,700 contracts. On this upside breakout, 52, 520. Big difference, right? So now pressure comes back in, and this is what you want. 121, which is really 1,200 contracts, and it goes lower. Alright, so pressure is coming through. Now I want to see break those levels. And then you have this lack of demand. It's the same thing as LPSY or whatever you want to call it. It's irrelevant. The point is, demand is dead. That's the point. Zero. And then it breaks through the support area. This volume is not really that good. You know, like when it breaks down here, like I don't see the prints, but I see the histogram. So that makes me feel like, yeah, you know, there's no demand, and then volume is increasing on the sell side, and there's price progress. So you're not always going to see a nice big fat print, but it's good enough. Then it moves sideways, and again, you have decent volume right here, 73, so 730 contracts that take out the low. And then over here, who gives a shit? I'm not seeing any pressure here, right? But this is important. This is important. High volume, 181. So why? There's something going on here. Like, if this kind of volume is coming in, right, on this, why isn't it breaking lower? So it's a little confusing. If it's confusing like that, you step back and think, hey, wait a second, something's not right. It tests high volume, low volume retest here. In the histograms, very, very easily seen. And then it breaks out on the upside. And again, you know, this is the line of resistance now, right? The prior high. Prior high, look at what it does. 1,700 contracts, big volume, busts right above. This area pulls back, goes higher, and then again, when it comes into this level, it doesn't make sense. You know, you have 1,000 contracts plus, but where's the follow through? So there's something wrong. And what's wrong is that it's in this area and they're selling. This is where the sellers started selling this area. So it does do a dip, and then it does up thrust a bit right here, and then eventually it comes right back down. There's no evidence here that I can see that there's selling pressure other than the entire histogram. Like, the histogram is telling me the whole thing is sold. So I mean, this is good, but it would be better if you have lines of support like right here, and you have heavy volume breaking through it. I like that. So over here you have this area, this support level, and you have 126, but I'm not feeling it, you know. So it comes back, it tests, then it starts moving sideways, and then here I like it a lot. I got breakout signal, and there you go, 850 contracts. It starts selling, starts hinging, moving to the side. Demand cannot rally, as evidenced by these 1Xs. They can't rally. Then what happens? Break right through. Bang! Right through. Absorbed, follow through, sell the test, bingo. And then you have, again, like 138 coming up, right? But is there any follow through? No. What behavior is this? Selling the retest, selling the pullback. Effort, reward, bag holding, whatever you want to call it. This is the breakdown. This is the test. They're selling into the test. Alright, so that's the second behavior I explained. Now it's coming back down. So you had it cleared with about 89 contracts here, high volume. I like it. They're clearing the level and goes lower, starts moving sideways, and then over here again 106, and then at this low 140, bust right through. You get a test, sell it, and done for the day. So this is the real Wyckoff method, not the shit that you see online where they don't know what the hell they're doing and confuse people. And I just can't believe they do all that. But let me just explain two things. The first is, why volume is important is because it it when Wyckoff explained what he explained in his courses, what he was doing was basically logically putting bullish indications together and then forming a judgment to see if the market was bullish. Or he would put bearish indications together and then using basic logic to see if this was um, a bearish move, or a bearish move was about to occur. So all he did was he judged based on price and volume. All right, that's what he did. He didn't make that stupid diagram that everybody uses on the internet. What he did was he made chart studies, and what he wanted to do was really put bullish and bearish indications, and then form judgments based off of those bullish and bearish indications. So now one of those bullish and bearish indications were behavior. Okay, what is this behavior? Well, you take price and volume, and one of the behaviors, this is just the tip of the iceberg, is obviously the breakout. On breakouts, as you know, it's all about a high volume breakout, or a breakout on volume, right? So where are you seeing the volume? You see it right here. It's breaking the lows on volume. So that is one of the behaviors. The second is what I explained, is selling the test of the breakout, and that also many times has volume. Why? Because they are selling at those levels. They are selling the test. So you have different styles of traders. Traders will sell the breakouts, and then you have traders that will also sell the test of the breakout. In both cases, volume is obviously required in order to determine whether absorption occurred on the breakout and had fall through. Did supply absorb demand and break? And when it pulls back, do you want to know if sellers sold the retest? Sellers sold the test of the breakdown, and this will also be evidence in the volume. So you take the price and the volume, you put it together, and you form a judgment. Okay, and it won't work all the time, but it is one way of reading the markets and making a sense of what appears as totally random really isn't. Okay, now I'm not saying that you won't get stopped out, but what I'm saying is that there are behaviors in the market, and the Wyckoff method is about understanding those behaviors and trading them. Alright, peace.